Good morning and welcome. Thank you for registering for today's quarterly update from HotStats. I'm Jane Pendlebury. I'm the CEO of HOSPA, the Hospitality Professionals Association. It's Thursday, the 7th of May, 2026. I always like to put the year in these, just when we're looking back in years to come. And it's 10 a.m. We're due to be chatting for around 30 to 40 minutes today with time for questions. So we should be finished well before 11 a.m. Please do ask questions throughout. There's a Q&A option, should be at the bottom of your screen. And if there's not enough time to answer the queries, we can get back to you afterwards. The webinar is being recorded and we're happy to share the link afterwards, and it will also be available on our website as usual and on our YouTube channel. I'm so pleased to welcome back Michael Grove from HotStats and Louisa Green, Managing Director at RBH. Both were speakers at HOSPA last year, so it's great to see you both again. Can I ask you to just introduce yourself briefly so that everyone understands the depth of knowledge and experience of our expert panel today? Should we start with you, Louisa?
Yeah, sure. Thanks. Good morning, everybody. As Jenna said, I'm Managing Director for RBH. RBH is a third-party management company. We operate, I think, 57 hotels at this moment in time across the UK and I. And we operate hotels from select service up to luxury, every single brand I think we operate with, and unbranded hotels as well. Working very closely with brands and across our management company. I think we've got about 90 in our management company team, and we do everything. We're a one-stop shop for all hotel services. So we've got our own IT department, our own property department, so we cover all services. But yeah, that's an overview of RBH. Thank you.
Brilliant. And Mike?
Yeah, so Michael Grove. I've been with HotStats now for the last 8 years. Prior to that, I was working with Louisa at RBH quite proudly. And before that, I spent most of my time in hotel finance across, mostly working with brands. And before that, I was in operations. So I'm very much a hotel guy armed with a load of data as well.
Brilliant. Thank you. We're going to start today with a presentation from Mike and HotStats with all the facts and figures, and then we'll go into more of a discussion when we'll bring in Louisa to comment on what she's seeing with RBH. Shall we hand over to you, Mike, for your slides?
Yeah, sure. I guess just in the way of a reminder, as I always do, for those who are not overly familiar with who we are and what we do. So HotStats is collecting P&L data from hotels all around the world on a monthly basis. So the numbers I'll go through with you now are from the sample that we collect, in particular for the UK, as we're going to be focused on that this morning. As you'll see, a year ago we were acquired by Duetto, so we are now a subsidiary of the Duetto portfolio. But still very much independent from a data point of view. So we're the kind of data experts within the business. So if I just start with the kind of big picture, because it's actually interesting as I've been presenting around the world, that this has been a busy start to the year from a conference season point of view. There's certainly a lot of appetite still around hotels. Hotels still sit very much now in the kind of primary real estate class, and is very much there's a lot of appetite from investors circling around the space. And for good reason, right? There's, even in the difficult times, as we would call the last kind of 12, 18 months, quite turbulent for the hotel sector. People are still spending more money on tourism and travel than they have ever have before. They're prioritizing it over other types of spend. So as much as cost of living might get squeezed in certain markets, people are still willing to spend more and more in the travel and tourism sector. And you can see here across the globe, if you look at, everywhere from Americas to APAC, the year has started, even this year, also pretty strongly from a demand perspective. The Middle East, of course, slightly out of kilter here, and the huge chunk of that came from the March numbers that we released a couple of weeks back. Obviously, the horrendous situation that the region has been going through for the last few months. In places like the UAE, for instance, where we saw a drop of 96% in profit per available room, and some serious challenges, of course, around the fundamentals there. Now, unfortunately, as we always talk about these things in the various different forms, I'm here to give the objective view of this rather than, the kind of emotional view. There are always, of course, winners and losers when we have crises like this. And unfortunately for that region, it means that there has been a slowdown of travel. It has meant that some of the key events have been moved or even cancelled. And those are relocated elsewhere. So there are other beneficiaries elsewhere in the world where you'll generally find that people can't, are not traveling to the Middle East, maybe, or certainly for the UAE, for a break, for their holidays, and maybe they go into Southern Europe, which is why we've seen such strong performance already in Southern Europe. And actually, some of those conferences and those big events that would happen from a corporate perspective, some of that corporate travel gets relocated to key cities like London, like Paris, etc. The downside, again, although there's always two sides to that coin, is of course the London in particular in the luxury segment during the summer months drives quite high demand from big spenders from the Middle East as they leave for the low season. And of course, this year maybe that's less likely. We were still to find out, but that could be something to consider and something to discuss later on. The other thing to point out is that Europe has started very strongly. So we've seen 5.6% growth in revenues and 12% growth in profits year to date versus the same time last year. And actually, when I was speaking to Louisa initially on this about this webinar, I was saying, well, it's been a really strong start to the year, and she was like, maybe not quite. And most of that has been because I just looked at the macro level, and I hadn't by that point looked at the UK specific numbers. So into the UK, if you look at where we've come from, this is quarter by quarter versus the same period the year before. So if you start from the left there, 2025 Q1, you'll see there, versus the prior year, we certainly started the year very slowly and challenged from profitability perspective. Q2, you could see it even further. By Q3, we started to see some positivity. It was a really good summer last year in comparison to the previous two quarters. I'm not sure we would call 4% growth year on year a significantly good summer, but versus what we had seen year to date, that was actually quite strong. Q4 then, you can see slowed down slightly, but again, still quite positive. So going into this year, it was quite unknown how we were going to what the performance would look like, but generally we've seen 2% growth on the top line. So we've still seen some growth, albeit fairly mild, and a slight drop off from a profitability perspective as we are dealing with rising costs. And I'm going to continue to beat the drum on the size of the revenue growth you need in order to be able to offset the cost increases we're going to continue to see, although we will talk a little bit about the nuance of those as we get through our discussion. But 2% is clearly not enough for us to be able to offset the cost challenges that we know are coming our way. And if we look at some of those trends across the revenue streams, you can see the various different demand drivers here that we're tracking. The other segment, of course, there's a lot of detail underneath that, which I'm going to kind of roll up at the big picture here. So rooms demand's been fairly slow. You can see there around 2% growth in RevPAR year to date. Wellness up there just under 5% overall, which kind of shows you that there are certain segments of the revenue streams that are growing much quicker and there's much more demand. If I give you like the kind of summary, wellness is now 7 years on from 2019. Wellness is now double per available room. So the revenue related to wellness is now double what it was in 2019. And golf, similarly, around 80% growth in the UK, but 4.7% down year on year. So some slowdown of golf revenues. Wellness continues to go from strength to strength. F&B continues to be very slow, albeit we've seen growth on last year, so 1.4% there. But the shining star year to date has definitely been conference and events. So we've seen some pretty good conference and events growth year on year to date. And if you look across the kind of various markets across the UK, I actually put 3 as the magic number last period. It's still roughly there, albeit maybe based on these numbers, we need slightly more than 3% growth in TrevPAR in order to be able to drive a higher profit number. But a few highlights or lowlights as you can pick up here. So it's a difficult start to the year for Brighton, for Reading, certainly from a profitability perspective. Aberdeen, Leicester, you can see there. Overall, most of the markets here have seen, a small amount of growth. Again, further success. So I actually betted the Cardiff would not repeat what we saw last year. So my hometown experienced some pretty significant growth last year, so some huge events in that city. Year to date, it's difficult for me to say it was a strong Six Nations because obviously as a Welshman, it certainly wasn't strong from a performance perspective. From the hotel perspective, we saw some pretty strong performance in Q1. And again, is the corporate demand in the city continues to thrive as well. Certainly some significantly good performance in that region. You can see there again, Nottingham doing well. Edinburgh's back up into that kind of growth phase, as is Manchester. So some of those key cities you can see have started pretty well. The challenge is going to be what happens with the cost lines, right? And that's the one that we all need to start look at to predict. We can base that on what we've seen in historicals and current trends, and also what's happening in the news. So we know, for instance, that labour costs are up quite significantly versus the same period last year. Again, the increase happened in April, so this is the kind of last month where it's not directly comparable year on year, because we saw the policy change in April. So we've got 3 months of this year that, if you compare it to last year, we've obviously seen that increase. This year's increases in April, dare I say it, are much tamer than they were last year. So we're looking at living wage increases of sub 5%. And of course, the national insurance changes are, we're not going to see any kick in the national insurance changes this year. So there, slight tailwind if you looked at it that way, as long as we see the revenue growth to support it. Utility costs are down overall, so 3.7% down per available room. Some of the challenge here is the gas and electric costs are down, but actually we have seen quite an increase in water costs versus last year, certainly in the kind of Thames water area. So the average seems to be 10-12% based on pricing. But we have seen some regions of the UK, up to 20% increase in water costs, which, is something to track. It's not a huge part of our P&L overall, but it is, of course, a significant part of the P&L. So we should keep an eye on that. Cost per occupied room, booking costs, in-room expenses, not far off the growth that we've seen from a top line perspective. So, pretty much in line with where we were, the same as some of those fixed costs in undistributed. So labour cost is certainly the one that we're currently keeping the closest eye on, but we do need to keep, of course, a very close eye on what happens in the Middle East with oil prices and the supply and the cost of utilities, because we know that is going to impact supply costs, energy costs, and probably a few other areas of the P&L as well. I highlighted London as we try to kind of keep a separate eye on London versus the rest of the UK. They obviously have very different demand dynamics. The one thing I think is been quite interesting this year is how the margin declines continue for around 1% drop off, 1 percentage point drop off in London, and less than 14% now in F&B profitability. And if you look here on when we come to the other side of things, I think those the legends might be the wrong way around here. Sorry, I think the blue on the left-hand side is actually 26. I do apologize. But if you Oh no, maybe I got it right, have I? Sorry, I'm just flicking it the right way around. Smaller drop-off we've seen in provincial UK year on year. And again, this is year-to-date numbers, but we are seeing continued decline in profit margin. And that, of course, is a concern overall for hotels. As you can see, what I thought was interesting is that the F&B profitability in the regions versus London is around 25%. Versus, as you saw on the previous slide, around 10 percentage points lower in London. So F&B still driving higher profits outside of London than it is within London. And I separated Scotland as well because it's quite interesting, the performance there. Certainly, as we've seen, Edinburgh thrive post-COVID. Glasgow's showing some pretty strong performance, and of course Aberdeen a much more bumpy ride. But if you look at the numbers here, we saw an uplift, a quite significant uplift between 24 and 23, a drop off in 25. But we have seen a pickup again in 26, as you saw on the previous slides. Edinburgh and Glasgow in particular doing really well. But again, if you look at Scotland here, look at the F&B profitability here at around 14-15%. There's quite worrying that profits in the areas of F&B are so low, and overall profit margin there at around 18% is still, this is year to date, so this is the coldest and most difficult time of the year for Scottish hotels. But we, again, if you see the difference between this year and last year, we have seen an uplift at around 3 percentage points of profitability. So a few things to consider. I try to make the slide part of this discussion as small as possible. So I've just obviously crammed a bit of information in there and obviously kept it fairly high level. I'm open to having discussions as we talk through the webinar or on the other side of this if you want to talk even further. But in summary, top line growth is slow. A good start for C&B. I think that'd be a really interesting one to discuss with Louisa because that surprised me to see that level of growth at this part of the year. Payroll expenses nearly double the speed of revenue growth. Again, that continues to be a challenge. I do see it slowing down. So if we do see a strong summer and we see less of an increase in the national living wage, well, the labour costs into Q2, there could be certainly, it should be a lot easier than it was last year. Certainly not going to be considered a tailwind by any means. Utility costs were on their way down, so 26 and 27 European projections were that we would see lower gas and electricity pricing. Unfortunately, obviously, the war in the Middle East has meant that is quite unlikely at this stage. In fact, we're already seeing them on their way up. Many hotels are under contract, so hopefully that will protect some UK hotels. But that water expenditure is something certainly to talk about and keep an eye on. From a forecast perspective, really based on what I just said there, right? I think many hoteliers I'm speaking with are predicting a fairly strong summer domestically as fuel prices mean that the flight costs are expensive. Southern Europe is already filling up quite quickly because of the relocation of some of that travel from US and the Middle East. But of course, we have the pressure on the cost lines that will come with any increase in electricity and gas pricing. And of course, the other unknowns as we head to the polls this week. I don't have a very strong opinion on this one. What I will say is that any change brings some unpredictability and therefore will be another impact on government expenditure and lots of other things that will come with any kind of change that we may or likely to see. That's it from me.
Brilliant. Thank you, Michael. That was a really nice, packed full of valuable information there. So, Louisa, overall, does that sort of match with your experience? Then we can dive a little deeper.
Yeah, no, absolutely. Better than what when Mike first told me he was having a flying time in Q1. I was like, oh, maybe not seeing that, but so yes, it's very relevant to what we are seeing. I think the positive, there's real positives coming through though. We're seeing more markets now in positive RevPAR territory than we did last year. So we are absolutely moving in the right direction. We need revenue growth, and we're starting to really see it. I think some of your data was really interesting, Mike, to see in particular the conference and events segment coming through that strongly. I mean, we've got some really good performance that we're seeing there as well, but I probably didn't realize the strength of that, what we're seeing so far.
Yeah, that meetings and events market seems to be picking up. I don't think it's just down to the HOSPA course that we do on revenue managing your meetings and events, but maybe it is having an impact. But it does seem to be across the board, doesn't it? And I wonder, Mike, I'm going to put you on the spot here. You may not have the answer. Do you know how that compares to sort of pre-pandemic? Because that sort of really upset everything. So it's a massive question just to drop on you with no prep. So sorry about
No, but while Louisa is answering the other questions, maybe I can dive in and have a look.
Yeah.
I also interested to see if it's concentrated in a certain part of the UK as well, because I think that's
That would be
Yeah, I guess what we're seeing in that, I mean, it's been hard work though to get to where we are now to start seeing this growth. So this just doesn't happen overnight. And there's a demand on quality, and I think it's a mixture of both conference and social events, quite a strong demand on the social events in particular that what we're seeing. But you've got to be a bit more innovative in your offering. You've got to up your game on quality. You've got to do something different to make it really compelling for people to book. But where we have, put a lot of work into that, we're starting to see some real success coming through. Not sure if you've got the data there, Mike.
not quite. I will be there soon.
Okay, we can jump back to that. So I think probably what struck home as you went through those slides and what I hear every single day is the increasing costs, and however hard you're working to increase your revenue or keeping your revenue stable, the costs are just ever increasing. And there was some awful stats earlier this week that 2 pubs per day on average have closed down so far this year. And I was talking to Kate Nichols from UK Hospitality, who said that actually there's, I think it's 3 hospitality businesses per day so far this year. And so, yeah, so that obviously that will include bed and breakfasts and
Yeah.
restaurants and all sorts. But it's a shocking figure, and I think we can probably almost solely put that down to increased costs. Probably, well, I guess business rates will have an effect, but the labour is the one that's
Yeah.
really hurting people the most, isn't it?
Yeah, no, absolutely. It gets to a point where the payroll cost is, I think in a small business is a significant challenge. If the larger the hotel, you can look for different ways to improve your productivity, improve your margins, look for flexibility, do everything that you can do definitely to try and pull that margin down. But a smaller business, you've got to have a minimum level of staffing there. And I think that's a significant challenge to them. But you've got to keep working at it. It's the biggest cost in our business. We continue to look at payroll. How else can it be improved? What else do we need to give a hotel team to improve their technique on rostering effectively? But the big wins are probably all gone. We've done all of those. It's now about the fine tuning, and really getting into the detail of it.
Yes, and looking for new revenue streams, which seems to be a very
Well,
consistent thread.
fundamentally, that's the main objective. You've got to build your top line. You
Mm.
know that's what we've been very focused on, is looking for opportunities to improve that revenue growth. Is it through your different room types? Be creative. Is it through your supplements? Is it through your total revenue spend? You've got to, every revenue stream now really matters.
Yeah.
Yeah, just I think what's interesting to compare with the what we're getting from UK hospitality there as well, though, Jane, is that I think I've said this before on here that hotels have the benefit of selling highly profitable bedrooms, right? And some of the ancillary services that drive, significant. So, like for instance, restaurants and bars really drive things like cancellation charges or car parking revenues or things that like have like quite high profitability margins. And of course, hotel bedrooms being the big chunk of what we do means that we're a bit more protected. We have another footfall into our business that maybe the bars and restaurant segment don't get access to. So of course, the pressure they're under right now is significantly greater than what hotels are experiencing. Um, and they have very little other levers to pull. I think the thing that we're talking about here that I've heard from many hoteliers, I think is the most exciting thing I'm hearing right now as a hotel person, is that I just think we're incredibly boring and lack creativity when it comes to the ancillary, how we drive, revenues, right? So the idea that we'll always see staff as a large expense because, of course, that it's our biggest expense line, but there is like the ROI mentality of the team that you have, right? If they're driving, if you enable them with a bit of creativity of how they can, how they can help drive the revenues, whether it's through incentives or through specific training programs, the kind of limiting of labor becomes less of an issue because, of course, there's such a focus on how everybody is working to drive top line revenues. And I find that quite exciting. I think that's become much more of a topic at the forums rather than just, RevPAR's down or slow so that we can have to like continually cut our costs. I think that's like, we still need to get creative and keep those costs trimmed. But I quite like the idea that there's a bit more focus now on how we can drive those front of house staff in particular into a kind of ROI discussion rather than a just pure cost center discussion.
Yeah.
Yeah, and we were the other day, we're just reviewing some, even just upselling tools, as some of the upselling promotions or products that you can do. And I think every hotel will do the bog standard, or there's champagne in the room and things like that. But it's interesting to see what's actually selling the more creative a hotel gets.
Yeah.
A Peloton and a bike. A bike, Peloton bike in a bedroom, then suddenly you've got a wellness room created and there's a demand for it. So, and I know quite a few hotels do similar things. But even, something as simple as, a pre-arrival, getting in, checking in early, the demand for an early check-in and people prepared to pay for it, I was staggered at. And it's something so simple, but,
Yeah.
that convenience factor, there is a demand for. But you've got to look, yeah, it's how all the different opportunities of pre-arrival selling. You've got to start that sales point way in advance before the guest even gets to the hotel and have the right systems and tools to capture it.
Yeah, and I think it feels a bit preachy, right, to be saying these kind of things and like, knowing how difficult it is on the ground. Right? Just the reason we say it is because that is absolutely the reality of how the businesses are going to continue to innovate and thrive, right? It's not going to be the case that, you just continue to do things the way you've always done them or slightly better than the way you've always done them and you see profitability margins falling. The
Yeah.
ones who are winning are doing things differently, right? I think that's the reality of the situation based on the trends.
Mm.
Picking up on that, actually, we've got a question here that's given the increasing pressures on operating costs, notably but not exclusively payroll, how do you reconcile a 12.3% increase in GoPar against the 5.6 increase in RevPAR? It seems counterintuitive. So if you want to comment on that one.
Well, isn't that sorry, one of those was the increase in that was the European numbers, the macro picture for
Yes.
the Europeans versus
Yeah.
the UK numbers. But also just remember mathematically, the GoPar numbers certainly at this time of year, in real terms they're quite small numbers. So the percentage increase in GoPar numbers versus the percentage increase in revenue numbers at this time of year will sometimes look a bit out of sync, right? So you can have a 12% increase in a small number that will, the increase in the larger number will also, will be relatively very different. So that is some of the reality when you look at these numbers. But I think what we're talking about there is the European number versus what I'd mentioned for the UK number.
Okay, cool.
Yeah, it stood out as quite a good performance.
But you mentioned there, half answered a question that you didn't even know was a question, actually, Louisa. Somebody was questioning what's included in the wellness figures. Now, I think it's sort of universally accepted that will be your spa and that sort of thing.
Yeah.
But also, you're putting a Peloton bike in a bedroom, and that presumably feeds into your wellness figures
That would
or
that would be rooms revenue.
rooms
Yeah,
revenue.
that would be supporting supporting an improved revenue in your room.
Yeah.
So no, not wellness, but yeah.
Mike, what would you say when you're collecting your data? Where do you get your wellness figure from?
So I've actually relabeled it as wellness just to kind of make it, more consumable, and also it fits in with the experiential trends that we're seeing. So that is actually the health club revenue and the spa revenues mixed together. So it does include memberships of the leisure club, but it will also include spa treatment revenues and ancillary revenues around spa and health club. So it goes everywhere from like a small treatment room in a select service hotel all the way to like, a full luxury spa. Um, the fascinating thing for me on that subject is that, golf and so I mean, when I was working with Louisa back in 2018, we were talking about like the estate that we were looking after at the time. There was a whole consideration around some of the kind of golf and spa assets that we had because they were coming with such high costs and such low profit margins because of the fact that costs were increasing and golf was becoming less and less popular. So we had these huge golf courses that need a lot of maintenance, and the memberships. So one of the consideration points is always like, do we consider to continue to use this space for golf and the other space for wellness? And of course, at that time, the trend spoke to deteriorating revenues and deteriorating profits. Um, but actually, then COVID happened, and all of a sudden, those trends turn everything on its head.
Mm.
Wellness becomes much more popular, golf does, and the other one was, of course, room service, which many hotels kicked out, and then it became a huge revenue driver. So there is like for me, this is why I'm a big fan, not just preaching from a data point of view, but even as an operator, I always felt like the trends tell you stories that maybe the direction of travel has shifted, right? Versus what you always knew or always thought. This is quite a fascinating subject. But yeah, wellness revenues are literally the revenues coming in from the health club and the spa.
And I think I can remember after COVID, we started to see that trend emerging with the high demand on, beauty and spa and things like that. And I think was that continuation of that demand is so encouraging. And the pricing around it as well. We apply revenue management pricing to leisure clubs, spas now as well because you've got to you get the most out of this improvement in that trend as well. So I see with great confidence that we continue to see this trend increasing all the time.
Yeah, perfect. I think I've got one more on costs before we before I think we can just put that one to bed and accept that they are ever increasing. So gas and electricity currently down, but likely to flip, I imagine. There's a query about the water costs and why the increase. What is behind that? Is that anything you can shed any light on?
No, actually, this was when I was looking at the detail in prep for this webinar. I'm a bit behind on the reviewing of the some of the data. So for the UK, I looked at the utility numbers, and I was actually expecting more of a drop than what I had seen year to date, because I was well aware that the prices had come down and were continuing to fall. So when I looked at the detail of it, gas and electricity costs had actually come down much more than what you could see there on the macro picture, but it was actually water costs that were driving it up. So I dropped a message to a couple of the CFOs in the industry, if they're listening. Thanks for the responses. But I was just trying to get my head around exactly what had happened. Obviously, you look online, even domestic prices have gone up close to 10%. I don't know if everyone's noticed that. Some regions have seen even more than that. And I think this came on the back of the collapse of a couple of the water boards. So there was almost forced price increases. There was this challenge that came up last year around, the water treatment issues, etc. So there was actually it was a UK issue, so domestic, and so some of the operators I spoke to yesterday said that on average they're seeing like 10-12% increase. In areas around London, we'd seen up to kind of 18-20% increase. And I'm guessing that was related to the fact that Thames Water was one of the regions that was hard hit. So I'm still looking into it, to be honest, but I just got the response I got yesterday from the handful of people I dropped a message to was yeah, they're seeing the same thing on the ground as well.
Okay, and if we can move on to F&B, because that was very interesting that the profitability outside London is improving. And I read something about pints are often £10 or more have reached the £10 mark in London for a pint of beer in certain places. I think they tend to be the one was rooftop bar, I think. So you can imagine a pint of beer would be expensive. But the increase in food and beverage outside London, is that something you're seeing as well, Louisa? Is that a big part of your business, the
It,
income from?
it is a large part of our business, and I think again, we came away from COVID doing the bare minimum around food and beverage, cut it right back. It was very cost focused, and it became, if you want to eat, that's your offering. Really limited, and then we started to realise actually we need to do food and beverage properly, especially in certain hotels where it's a key part of the overall guest experience. So we've started to look at different concepts in the hotels, making them relevant, upping the game, changing away from the norm of a hotel typical restaurant. And where we have really made some significant changes in what that looks like, we're seeing brilliant results. I mean, some of it, one hotel in particular, we did a full refurbishment and changed the concept and everything. And it's flying in food and beverage, and something I never thought I'd be saying at this moment in time that food and beverage is doing so well at. But you've got to, it's got to be relevant to the individual hotel, hasn't it? In a select service hotel, we will keep it to what is required. But where it's really going to make a difference and there's a total revenue opportunity there, it's you need to explore it. But it's encouraging to see it coming in. I think if you move away from that typical hotel concept, it's amazing what can be achieved.
And Jane, just in answer to the question as well on the cost change, or the difference between the regions, just looking at it now. So the cost of sales in London are lower as a margin than they are in the rest of the UK. Some of that will probably come down to the pricing gap.
Awesome. Yeah.
But the labour costs is the issue. So the significantly higher labour costs in London in F&B versus the rest of the UK kind of speaks to the reality of what we know, right? And so if revenues, this is this is probably the worst time of the year to review it as as a big picture. I think we've just taken a sample over a few years here, and maybe London is affected more at this time of year than the provinces, maybe a part of the story. But it's certainly, a concern when we're down at these levels of like, sub 15% profit margin. That's without allocating energy costs and sales and marketing costs and accounting, etc. So F&B outlets in general are not making money on average in London right now this time of year.
It's tough, isn't it? So should we start looking ahead a bit? You've already reported Southern Europe showing a lot of strength from probably travellers not being able to go to the Middle East. Do you think that's going to impact the UK significantly this summer, as we did sort of post-pandemic again? The feedback I'm getting is that people are definitely getting more inquiries for this summer than they would be expecting at the beginning of May.
Yeah.
Louisa, how's that look
Yeah.
in your
So,
head?
I mean, when we look ahead, and I look at the summer in particular, it's looking healthy, and it's certainly, we're pacing ahead. We've got some, there's the Commonwealth Games in Glasgow, for example, really spiking Glasgow for us. Airport hotels naturally, as you would expect, pacing backwards. But regionally, we're seeing a good pace. And I think we were about to really kick into the peak demand part for summer as well. So we're going to start to see that booking level accelerated as well. We've got some pockets of gaps, and in particular, I would say in August in the London hotels, in some of the London hotels. But again, London operates with such minor markets where, our hotels around Excel have been doing very well they've picked up more business in Excel. So I think overall, I think the summer is looking healthy and ahead. I've got a couple of gaps which we need to work on. It's just London, but interestingly, you've got the Edinburgh market. When I was looking at that one earlier, that was always forecasted to decline this year. I think, but we haven't seen that decline. It's held, and it just shows how robust that market that we're seeing. So if that continues, we won't, we should expect that to still be positive growth as well this year. So positively, looking positive. I don't see, we don't have any hotels that are, reliant on the Middle East trade, for example. So it's looking positive for the summer so far.
Yeah, certainly London has suffered, and service departments probably most of all with
Yeah,
lack of Middle East trade.
Yeah, I think just some consideration points for the summer as well, though, is that, that lack of ability to, I say lack of ability to travel abroad, but certainly, those people who would have gone to Dubai, for instance, in the off season are probably not doing that right now. I think even Turkey and Egypt have seen a
yeah,
slowdown because of it. So the staycation demand mixed with the fact that it's so expensive to get on a flight. We've got
yeah,
limited destinations. There's less and less people who want to go to the US, from what I can understand from the anecdotal data I have. Um, there are, people are not locked in the UK, but considering we had an unbelievable summer last year, and don't underestimate the impact of a World Cup in the middle of the summer, albeit that the time of day is going to be a bit weird for Brits. Scotland are there, England are there. I think it's, again, that's going to be another driver of certainly for F&B for this year. So here's a few
yeah.
considerations, a few positives for the summer.
Yeah, everything's pointing in the direction it should be a good summer. I think, but it's just we need to have a bit more confidence around it yet.
And by the way, Cardiff's a great place to be in the summer.
It's too busy in Cardiff.
Yeah, yeah, it looks like it.
Yeah, no, that's good. South Wales always, when you're doing the slides, Mike, South Wales always seems to feature, which is good, which is good. Right, we've got the only outstanding question we've got at the moment is very specific to Newcastle, which I probably think is best dealt with offline, unless you've got any quick answers on Newcastle, either of you. I think
No, afraid not.
we'll do that one separately. So I've got no open questions at the moment. So if there are questions from the listeners today, please pop them in. But Louisa, is there anything we haven't covered that you noticed in Mike's slides that you'd like to comment on, or just anything anecdotally about what you're seeing in the business at the moment?
Yeah, no, I just think other areas of the what would, you've got to keep looking for different opportunities, haven't you, in this industry? We get thrown challenges every year, it seems, and it's a different challenge. As everyone is doing, going into the world of automation, seeing if there's opportunities there to, help mitigate some of these increasing costs. And I don't think there's a silver bullet for automation, but it's helping. There are aspects that we can do with hotels to help reduce either the tasks or make them more efficient or a bit of a payroll saving. So we've been doing quite a lot of work on automation across the last year, I would say. And it's different for every hotel. So it depends on what that hotel needs are, where you can have an opportunity to do something with automation. And then the other key area that we've focused on for probably the last 18 months is really looking at the business intelligence and the analytics, getting into the detail. We recently implemented a analysis tool, and that enables us to look at segmentation by day, RevPAR by every single different room type. Where is the opportunity? Have we got a gap in next August or in 12 months' time that we need to be doing something about now that we then activate a marketing campaign on? So I think just, this embracing of data, um, which will be, we utilize HotStats, for example, and have done for years to help us analyze our cost benchmarking because it's trying to find every opportunity we can to make a difference, to drive that margin performance. So either top line or bottom or in the middle of the account.
Okay. Mike, I've got a question clearly from a Welsh person. Her surname is Jones. Apologies, I missed the start of the call. What is driving Cardiff so strongly? You mentioned the Six Nations, but Cardiff has been consistently doing well. I remember HOSPA last year, it was mentioned as a thriving city. What else is Cardiff doing right?
Look, I think there's a lot of things that happened over the last few years that house prices, by the way, I'm lucky enough to have been a beneficiary of that as well, right? This is like Newport and Cardiff have seen significant growth, some of the fastest moving markets in the UK over the last few years. And that's come from some policy things that have happened, right? So like not just Visit Wales being like, the tourism board, but also Invest in Wales. You see them at all of the events. They're, a bit like the Scottish did over the last 10 years or so. We have seen a lot of focus on getting business into Cardiff. So there was a lot of corporate movement over the last kind of 5, 6 years with the opening of the new BBC buildings and HMRC. We obviously have the Doctor Who exhibits, etc. The sporting events and the music events. Again, I love to brag about it, but Oasis chose Cardiff as their opening venue for their gigs last year. Although apparently that's because they wanted to use it as a testing ground. But let's take the credit on. But there's a lot of good fundamentals there. There's a corporate thread now in the market, which I think is really important for a capital city like Cardiff. There is it's a very a growing leisure destination. There's much more music and sporting events going on. So it's a mix of all of those things. For me, I put a lot of it last year, quite lazily, just put it down to the fact that we had these large music events, so Taylor Swift, Oasis, and whoever else. And maybe this year it's the shift of the Six Nations and because we have different teams at home this year versus last year. So if we get into the detail of it, there's probably a few different parts, but I would say none of it is in one bucket, which is a good thing for Cardiff, because generally when the events were doing well in Cardiff, Cardiff would do well, and when there was no events in Cardiff, Cardiff would struggle. And actually, what we're seeing now is a pretty good thread of corporate and group business coming into the city as well.
But it has the ability to command such a premium rate over those
Oh,
events, which is incredible to see. I think even across all the Oasis concerts, Cardiff was the leading RevPAR market across those concerts. And
yeah.
I think there is something around the experience you get when you go to Cardiff. So.
Got an interesting one here, going back to F&B actually, and F&B in London specifically. You mentioned F&B profitability in London hotels is now sitting below 15% before energy and overheads. At what point does hotel F&B stop being a real profit centre and become more of a guest experience cost? are any operators already starting to treat it that way in the numbers? I guess, Louisa, you're probably not doing that yet. Or do you look at it, do you view it differently in London?
It depends on the hotel.
Mm,
Absolutely. Some hotels, it absolutely is a cost to, for the hotel. And you have to offer it to get the overall RevPAR and ADR for the hotel.
mm,
So it's very dependent on the hotel. But I understand, where you have got, high-end hotels in London, luxury, the payroll will be significant as a margin there because you've got multiple outlets,
yeah,
and multiple kitchens. So.
yeah,
I also just want to make sure I'm not being misleading here as well, right? We're looking at year-to-date numbers.
mm,
Yeah.
So this is like at
yeah,
this time of the year.
Yeah.
If I look at London total, rolling 12, so that's the best way to look at it right now. We're at 19%, which is a 8% drop versus 2019. I don't want to keep going back to 2019, but being as I have it on the screen, I thought I'd
Yeah.
mention that. It's around half a percentage point drop versus last year, or the rolling 12. So, it's concerning. I just wanted to make sure that was clear that we're not sat at 13, 14% on a 12-month
yeah.
portfolio.
Yeah, that's a very good point, actually. We're just looking at the first quarter, aren't we? Right, I've got one last question here, which I think is probably a tricky one to answer. For global hotel brands with presence in all regions mentioned, based on the data we've seen, what is a top recommendation on actions to take as a pivot or hold fast for the rest of the year based on the unexpected first half of the year globally? That's quite a tricky one, possibly to answer. I'm going to give that one to you, Mike.
Well, if it's one of the actual global brands asking this question, then they're probably friends of ours already. So I'm sure I'm speaking to someone within that organization. Um, Look, I think the one size fits all approach is not that that's what the brands do, but that is part of the danger here, right? Is that there are different parts of the world where you still have an undersupply of certain asset classes, right? So there are still some parts of the world where, for instance, there's not enough extended stay. We still have a deficit there, which is not the case in somewhere like London, where we
Mm,
have probably an oversupply in some circumstances. And I'm just using that as one example. It's the similar kind of story with the ultra luxury segment. Most cities that had what have London got going on? Five, six ultra luxury hotels going in the rolling 12 period. I mean, or 24-month period, I guess now. Um, it's not made a huge dent in the market at
mm,
this moment in time. That although I suspect that this the lack of Arabs in the summer will change that, but there is like this real this idea that there's a one approach globally is probably one of the challenges, right? Distribution channels will be different in different markets for different types of assets, and obviously, if they're from a brand, they'll already know a lot of this stuff. I think that the one thing that is consistent is that if the data is telling us that people are willing to spend more while on property, they're willing to spend more in some of these services while they're on property, if we can just make it easier for them to spend that money and incentivize the teams in order to be able to drive that revenue. Certainly in Europe and in the US, where there's very little left to take off the bone in hotel operations. I think that's the unlock, right? We should be putting everything behind that. And even in a select service hotel, you can still drive a decent percentage uplift in ancillary services. And of course, luxury hotels and full service hotels, that's what the model does, right? And if you're not doing that, and if we don't have a full focus on it, I can tell you I stay in so many hotels every year in different parts of the world. And the one consistent is I'm always left disappointed by the lack of um, I don't have enough opportunity to kind of spend more and have more of an experience at the hotels because we're just so focused on delivering the minimum amount. And I think that's a real challenge, right? If you look at the industry now and you go, right, what's going to work over the next few years if you can't continue to strip away at the costs because there's just not much left for you to strip away to make it to
mm.
keep it being a hotel, then the reality is that this is going to be all about how you drive demand and spend on property, especially when the trends tell you the customers are willing to spend more on property.
Yeah, which is exactly what you were saying earlier, isn't it, Louisa? So that's probably a great point to end on. A positive that there is opportunity, whatever your hotel, probably still for upselling. So great, thank you so much, Mike, and thank you very much, Louisa, and thank you all for listening and for your questions today. I'm sure the information shared and discussed today will be reassuring for lots of our listeners that they're not alone in where they're succeeding and other areas where there's still opportunity to make things better. As always, if you need formal advice, then please approach your professional advisors or come to me at HOSPA for a referral. And please let me know if you'd like to be introduced directly to Mike or Louisa as well. Please take a look at hospa.org for other upcoming events. Our ever popular Great Green Balloon Debate returns on the 12th of May, so that's just next week now. That's at the London Claremont Charing Cross Hotel. It's going to be a great night. On May the 19th, we'll be at the Everyman Cinema in Broadgate with Next Wave Hospitality. The programme is now finalised and the morning promises to deliver valuable facts and figures backed up by discussions similar to today with hoteliers and operators at the coalface. June is a busy month for us here at HOSPA. We've got two round tables along with Hotelier's Voice, 2nd of June in Kent and 9th of June in London. We have a webinar with Q Green Hotels and Barclaycard Payments, all about the benefits of working in partnership. Like today, that will be broadcast live on the 2nd of June at 10 a.m. Our annual finance update, which is probably the most relevant for our listeners today, that is with BDO and will be on the 11th of June. So details to register for that are on the website. And finally, our 2026 Hotel Marketing Awards is on the 22nd of June at the Waldorf Hilton. But thank you very much for my expert speakers today. Thank you everyone for listening. And I hope the rest of your Thursday goes very well. Thank you all and goodbye.
Thank you.
Thanks. Bye.
Bye-bye.